Friday, September 16th, 2022, Maneco 64, home of alternative economics and contrarian views. So a couple of days I spoke about a hard landing for the US economy, that the Fed had a snowball's chance in hell of engineering one. Well, yesterday after the market closed, we got a confirmation of this through FedEx. So FedEx is experiencing a hard landing, and it's an ominous sign for not just the US economy, but the world economy. And we're going to look at that today. Before we go forward, I'd like to make a few announcements and look at some other headlines. First announcement is, I don't know why, but I hadn't bought this book before. It's called The War on Gold by Anthony Cyril Sutton. He's a great author. He used to work for the Hoover Institute, and then he got kicked out because he started digging deep into the city of London, into Wall Street, how they financed the Bolsheviks, how they financed the Soviet Union. If you Google Anthony C. Sutton, you find really interesting books. But he wrote something on gold, and I bought that a couple of days ago. I received it yesterday, and I just started reading. It's really interesting, so I won't comment further on it, but I already highly recommend it. So hopefully I'll finish it soon and talk a little more about it. The other one is what's happening in the US economy. I saw yesterday that mortgage rates hit the highest level since the 2008 financial crisis. It hit 6.02. It's more than doubled since the recent lows. So that's another nail in the coffin of the consumer. The other one is SEC backs fresh push to shore up 24 trillion treasury market. You see, I worked in the bond markets, and I even traded cash treasuries in the early 90s. And it's supposed to be as good as gold, so to speak. It's supposed to be the deepest, safest, most liquid market in the world. But we're having problems since March 2020, and that's a bad sign. And I saw a tweet as well recently here, as you can see, Gold Telegraph. There is 24 trillion worth of US Treasury debt. Bank of America recently said declining liquidity in US Treasuries market represents the biggest systemic risk to financial markets since the 2007 housing bubble. China has sold 7 months in a row, ready for sanctions. So yeah, this problem has been going on, and they've been trying to solve it. And I can tell you, working in the markets, if a market is not liquid and deep, regulators can't do anything about it. It's a sign, that things are very leveraged, and people don't trust counterparties. They don't trust the value of treasuries either. So it's not something that's going to happen in the physical gold and the physical silver market. You can always buy and sell physical gold very easily. Maybe not when the fiat currency collapses. You'll have to barter it. So back to FedEx, or Federal Express Corporation. And why is it so important? Well, many of you probably have heard of the Dow Jones Transport Index, and of course the Dow Jones Industrial Average. And there is the Dow theory as well, of course, that if the Dow Industrials is making all-time highs, that the transports should confirm that all-time highs. And if it doesn't, it's a non-confirmation. It's a bad sign. And why is the Dow Transports still so important for the markets, and also for as an indicator of the health of the economy? Well, because if an economy is doing well, you expect people or companies like FedEx and others to be transporting things around. And the fact that FedEx, which is a bellwether of the Dow Transports, I would say, had bad results, it's not a good sign. So you can see here, this happened yesterday after the market closed. They came out with their results, And I got a message from this friend of mine. He's on Twitter as well. You can see what he wrote there on top. But FedEx plummeted 14%, almost $30 lower. So I got a write-up or an article here from Bloomberg late yesterday, London time. FedEx tumbles after pulling annual earnings forecast. So let's go through this. It's not very long. You can see what's going on. FedEx Corp withdrew its annual earnings forecast and said preliminary results for the quarter fell short of expectations, sending shares of the package delivery giant tumbling. Adjusted earnings for the first fiscal quarter were $3.44 a share. The Courier said Thursday in a statement that was well short of the $5.10 average estimate of analysts as the company grappled with macroeconomic weakness in Asia and service challenges in Europe. This is what the U.S. CEO said, and I quote, "Global volumes declined as macroeconomic trends significantly worsened later in the quarter, both internationally and in the U.S., said the chief CEO, Raj Subramanian. We are swiftly addressing these headwinds, but given the speed at which conditions shifted," listen to that carefully, Mr. Powell and other central bankers, "first quarter results are below our expectations." That's for, I guess, next year. Or I don't know if this is, for next year, or I don't know when they have their first financial quarter. FedEx said it would withdraw its fiscal 2023 earnings outlook provided in June. So they can't tell you anymore what's going to be happening for 2023 because things have shifted or changed so fast. It expects conditions to worsen in the second quarter. Shares of FedEx sank 11% in aftermarket trading at 182 as of 4:36 p.m. in New York. The stock already was down about 21% this year as of the close of regular trading on Thursday. So that's a very bad sign. And like I said in my video from a couple of days ago, it's going to be very hard for the Fed to engineer soft landing. And they're expected to raise rates by 1%. I think it's next week. How damaging will that be? I mean, the problem with raising rates in this environment, and of course, I think the central banks, they delayed the tightening for too long, and that led to even more growth in leverage and credit growth, boom, all kinds of bad acts, too many people borrowing too much, and now they're raising too far. It's going to cause havoc. Yes, when Volcker let rates go to 20%, it did cause a double-dip recession in the early 80s, but the economy and the system wasn't as leveraged. There wasn't as much debt. So I'm not sure. I think the Fed will have a tough time raising rates again after next week. It could be their last one, but who knows? And as you can see here, there's also institutions like the World Bank now. And again, I'll reference Gold Telegraph on Twitter. Breaking news, the World Bank is warning that leading central banks risk sending the global economy into a devastating recession next year if policymakers raise interest rates too high in the months ahead. So I think this was right around the time of after the FedEx announcement in the aftermarket. So just show you the chart of the Dow transports. So if the Dow transports was near the highs, and the rest of the stock market was still doing as badly as it is this year, then you could say there's a chance that we're bottoming in the general stock market. But the fact that the Dow Transports is confirming the weakness in the overall market is a bad sign for the economy, I would say. Anything else before we look at the markets? Yes, yesterday I interviewed Mike from Earl Grey on YouTube. He's an Englishman in St. Petersburg, Russia. Very interesting guy, and we spoke for almost an hour. So the video is on my channel if you want to watch it. And with that, let's quickly look at the markets this morning. It's 8:21 a.m. London time. So we've got spot gold at 1662, down just over $2. High has been 68. Low's been 1659.30. Silver is trading at $19. It's down just under 1%. High's been 1924, low 1889. Oh yeah, I forgot to say I bought some more Silver Britannias last night from Gold Investments. So yeah, I thought yeah, I really need more silver, and I've got extra cash in the bank. I didn't need it, so that's what I did. Hopefully I'll get it by next week, because well, I will get it next week, but it'll probably be Tuesday because we have a bank holiday here on Monday. To the stock markets, we got the Dow futures down 200 or 0.75%. The Nasdaq 100 futures down 1%. S&P 500 is down 0.78%. So FedEx is probably not helping. The FTSE 100 index is down 44 points. Eurostoxx 50 is down 44. FTSE is down 0.2%. Eurostoxx is down 1.25%. Sterling is testing 114 here. I think this is the lowest level since 1985 that we're testing. We got down to 114.08. Right now it's down 0.4% at 114.20. The euro is holding up relatively well in terms of the pound. It's just below par at 99.86. It's down 0.1%. Dollar's down 0.2 versus the yen at 143.25. The dollar is up 0.1% versus the Swiss franc at 96.30, and the dollar is above 7 versus the yuan now. It's up 0.2% at 702.50. The dollar is up 1% versus the Russian ruble at 60.25, so still stuck around this 60 level. Aussie dollar is unchanged, 66.97. The dollar is up 0.25% versus the Canadian dollar, 132.64. And the Kiwi dollar is unchanged at 59.67. General commodities, WTI crude is up 0.5%, 85.13. Brent crude is up 0.2% at 90.80. And high-grade copper is down 1.1% at 344.55. U.S. nat gas is down 1.3% at 8.23. The Dutch nat gas futures is down 3.5%, trading at 206. To finish off, we're going to look at the bond market. We'll start with the gilt UK government bond market. Well, we got the 2-year gilt yield at 3.10. The 10 years at 3.16. So fairly quiet so far. No change there. The US 2-year yield is at 3.90 now. It's up 3 basis points, so approaching the 4 level. And the 10 years at 3.47. So yeah, curve still heavily inverted, pointing to a recession. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. And think about subscribing to my channel if you watch my videos regularly but haven't. And with that, I wish you all a great rest of the day and a great weekend. Take care. Bye.